Ghana will generate about $6.6 billion annually from lithium mining. This is when an Australian mining company, Atlantic Lithium Limited, starts production in 2026, which will create between 1,000 to 2,000 jobs in the central region.
Ghana stands on the edge of a significant economic transformation. The country has discovered commercial quantities of lithium, a critical metal for the world's green energy transition. This discovery is centered around the Ewoyaa lithium project. Ewoyaa is near the coast in Ghana's central region. It is poised to become the nation's very first lithium mine. This development places Ghana directly into the global supply chain for electric vehicles' battery storage. The world is hungry for these materials, and Ghana now has a seat at the table. The project represents more than just a mine. It is a chance for Ghana to redefine its role and build a new pillar for its economy beyond traditional exports like cocoa. The journey for this project has reached a critical stage. In late 2025, the mining lease for the Ewoyaa project was formally submitted to Ghana's parliament. It is now under review by the Select Committee on Lands, Forestry, and Mines. This step is incredibly important. Parliamentary ratification provides the legal certainty and regulatory green light that the project developer, Atlantic Lithium, needs to move forward with confidence. Without this official approval, large-scale investment and construction cannot begin. The decision made by lawmakers in the coming months will therefore echo through Ghana's economy for years. This project connects a local resource directly to a powerful global trend. The demand for lithium is surging. According to major industry players like Albemarle, global demand is projected to exceed supply by as much as 500,000 tons by the year 2030. This gap is driven almost entirely by the explosive growth of and the batteries that power them, along with countless other electronic devices. For Ghana, this means its newfound lithium reserves are not just valuable, but strategically vital. The Ewoyaa project could provide a stable, long-term source of a commodity that the world desperately needs. The initial discovery of high-grade lithium in the region happened back in 2017. A mineral prospecting license was granted in March 2018, paving the way for extensive exploration and feasibility studies. Now, years later, the project is on the cusp of becoming a reality. However, the path to production has not been entirely smooth. The project has faced regulatory delays that have had real-world consequences for its workforce. In November 2025, it had to lay off over 100 workers. This action reduced its total workforce significantly, from 167 employees down to just 62. These layoffs highlight the human cost of administrative delays. The government has proposed a new legislative instrument that moves away from a simple flat rate. Instead, it introduces a sliding scale for royalties tied directly to the market price of spodumene concentrate. The royalty rate would start at 5%, when the price is up to $1,500 per ton. The rate would then increase as prices rise, reaching a maximum of 12% when prices exceed $3,000 per ton. This flexible structure is designed to be a win-win. It protects the project's viability during periods of low prices, while allowing the nation to share more fully in the upside when the market is strong. This new royalty plan was received with significant optimism by the financial markets. The share price of Atlantic Lithium experienced a significant surge, jumping by approximately 30%. The Minerals Income Investment Fund, MIIF, is investing a total of $32.9 million, including its $27.9 million for a 6% stake in all Ghana tenements, aligning national upside with project success. The development of the Ewoyaa mine is planned in distinct phases. The initial stage involves an early production plant. This smaller facility is expected to process approximately 450,000 tons of ore. The original timeline targeted the first shipment in the second quarter of 2025, although that is subject to the final ratification of the mining lease. This phased approach allows the company to begin generating revenue, fine-tune operations, reduce initial risk, and streamline the path to major production. The larger plant is designed to process 2.7 million tons of ore per year. Operations at the main facility are scheduled to commence in the first quarter of 2026. The main plant is expected to have a productive life of approximately 11 years. This plan supports supply, jobs, taxes, and royalties over the long term. The market has been volatile, but long-term fundamentals remain strong. The most important event to watch is the outcome of the parliamentary review. Ratification of the mining lease is the single most important milestone. That ratification unlocks full-scale development, financing, and hiring. A key indicator will be rehiring of the 100-plus workers laid off earlier. First shipment will move the project from plan to revenue. That moment signals Ghana's arrival as a lithium producer. In conclusion, Ewoyaa links a domestic resource to the global green revolution, with jobs, investment, and a modern, price-sensitive royalty system, if Ghana clears the final legislative hurdles and executes the plan.